What's up, guys? It's January 21st, 2025. We had a gap up, some sideways price action, and then a bull trend day. The bull trend wasn't the strongest. There was a wedge bottom in the opening, and then the bulls recovered. They weren't able to get one to one of the. Yeah, they fell short. They got about 50% of the opening range. But let's see if they got one to one of the gap. Kind of one to one in the gap. Depends how you measure. I don't really measure from down here, so to be consistent, they didn't get it. But that's okay. That gap, that measure move is just to keep people in check for not getting short until a move is met, anyways. This is a daily. This is the daily chart. This is the 15-minute chart. Been in a bull trend since January 13th, which is this low here, which is this price action down here. So here is here. Let me move this chart to the right a little bit. So we see a sell-off, leg one, pullback, leg two. Second leg trapping in trading range. This second leg is also the third leg down, creating a wedge bottom. I really think January 13th was a great buy signal. That price action is right around here. So we see the sell-off, which is this tail, and we see the rally, which is this opposite side of the tail, same tail, I guess. But then we see the Sean close. It closed on its high, creating a bull body. The bull body is not dominant. There's more two-sided trading within this candle. And then we see follow through. Bulls who bought this candle here made 1R very quickly and then took profits. Or maybe they went for a swing and they pressed their position on the pullback. There's different types of traders that have different outlooks. Scalpers are going to take profits at 1R quite quickly. Swing traders are going to look for a pullback. And they got that pullback on the 16th to press their position. So they buy here, they buy more, and now their average price is going to be around the midpoint. Wait a minute, what's going on here? So they buy the high of this candle, and then they buy the low of the 16th. That's their average price, about the lower third of the 15th candle, and now they're deep in profits. They're looking for one to one of the breakout bar, and that's almost met. One to one of the breakout bar puts us at the top of the sell bar, December 18th bar, which is the minimum bulls want for trading range price actions to get back to the high. So if this is the low, this is the high. And then they go for the breakout, which puts us at new all-time high, 63.70. That's okay. That's a long term. That's whatever. We are approaching another swing high. We broke out of this swing high, so that's good for the bulls. This swing high here, bears are going to be sitting, looking to sell, looking to sell, looking to sell. I'm not looking to sell. I'm saying what bears are going to do. Bulls want to break out. They want to keep buying, and they want the market to go up forever. So on today's candle, this bar right here, where does it start? Okay, so that must be the tail. Oh wait, is this the overnight session? It is. So where does it start? Right here. I want to see where this tail is at. So why is this tail the 20th here? Oh, it says 4:30 p.m. so it closed. Wait, on Monday. What day is it today? Today's Tuesday, so this is yesterday's tail. Overnight session. Okay, whatever. It's the overnight session tail. It went into today. Today's price action starts right here on this, but we're seeing the combination. I hope I said that right. Anyways, so big sell-off puts us in a trading range. We have a big up, big down. First target, just how I said on the daily chart, is going to be here on a bigger time frame. On the 15-minute time frame, bulls are going to want to get to the top of the sell climax and go for a measure move higher. So they have broken out of both ranges, but they got some space. They got about a little bit under 80 points to go. So it's like, what, 40, 70, 45 points till they complete their measured move. If they go for one to one of the range, bears can very well take over. Moves fail around the 50% sometimes. Counting legs, let's stick to what we do. Leg one, two-legged pullback by the bears right here. strong rally, should get its own second leg. We get a wedge bottom, leg 1, pull back, leg 2, pull back, leg 3. There's also a wedge bottom right here. So leg 1, pull back, leg 2, bigger pullback, leg 3, wedge bottom, wedge bottom, wedge bottom. And to support, this candle was testing the high here. It's a breakout point, and we rally for the rest of the day. 1, 2, 3, 4 15-minute bars. First reversal. If you were to buy this on the 15-minute chart, it's a small bar, so you put double the size. Oh, it's a nail biter. You might get, I don't think you would get stopped out, but you could be very close to getting stopped out. You would sell almost to 1R. Bears can't make 1R of the sell signal, so it's a bad sell signal. And then bulls make their 1R above a sell signal, so that tells you the rally's strong. See, 1R was met here, so what am I talking about? So this is a bad sell signal in a bull trend. 1, 2, 3, 4, 5 bull bars. Bear bar, sell signal, bad sell signal, has more tail, has two-sided trading. Bears that get short here can't even make 1R. Quick bears will scalp out. Most bears will get trapped, and they'll be forced to buy back shorts. So bulls who actually bought this bar would make 1R quicker. If you're buying bull bars and making 1R, if you're buying bear bars and making 1R, the bear case is not strong, right? Bears should be making 1R below bear bars, and bulls making 1R below bull bars. Anyways, yesterday we have a gap up, rally, we go sideways. Today we have a gap up and we have opening. We have sideways price action for about an hour, or you could say 2 hours, depending on how you want to read the range. We have a gap up, so there's more bullish momentum. Leg 1, pull back, leg 2, pull back, leg 3, wedge bottom in a bull trend, because this gap up, this bar is a bull trend. And then we rally. Leg 1, pull back, leg 2, pull back, leg 3. Trading range price action, it sells off. Leg 1, pull back, leg 2, pull back, leg 3. Very hard to count legs in a trading range as it's unfolding. I actually thought we were more. I didn't trade today. It's my dad's birthday. I had some things I had to go do. So I'm back now. He's out doing his thing, gallivanting the town. I'm drinking coffee and studying for the rest of the day. Cheers. I actually thought we were going to sell when I saw 15 and 16. I walked away around bar 20. I didn't trade. I was just walking with trading range. And then I saw bar 27, 28. I was like, oh, wow. The bulls can start to break out. So, yeah, tough morning. You can say the range was right here. You know, the market's in a transition. So the bull trend started at the bottom of the range, bar 10. I don't think it was clearly a bull trend until 35, 36, 37. So I think right there is when traders started to catch on. It's going to be bullish. Fast traders might see that. Faster traders would see that the bears failed to have a gap close, and when usually there's a failed gap close, it'll go the other direction. Hint, hint. I'm not saying about a close here. We very well could have sold off. It was just around here's when I started to realize it was a bull trend day, and then here's when I was like, oh yeah, we're gonna go higher. Where are we? I'm rambling. Okay, bar 10 reversal 13. So bar 9. A traditional 2-bar reversal would take us up to here, but the 15-minute chart's 3 bars. So let's say this is 1 bar here, 1, 2, 3, very close to the high. So on the 15-minute chart, this is a 2-bar reversal taking place. Yeah, see, it came very close. It would have been great if bulls can close above bar 3, but they came close, and then bars 5 and 6 were bears failed to make a new leg lower after bar 3, which looks like it should get a second leg. And bar 4 looks like it should get a second leg. So that put us in a trading range with 4, 5, 6. 4, 5, 6, and the tail of 7 starts to break out. 9 is retesting the breakout point, which is the high of 4. Bar 4. So this around here is where bears were retesting the breakout point, hoping for a failed breakout. They get short 26, 27. It traps them. They're forced to buy back shorts. Bulls buy the EMA because they know we're in a bull trend. It's a bull regime. Bear setups fail. Rally. Bull flag. Deep pullback trading range. Leg 1, pullback leg 2. 35 becomes a high 2. 35 is at a worse price than 30. 32 is a high 1. There's actually a lot going on here. We can count this in multiple different ways. I'm just seeing it as this. Leg 1, pullback, new high, high 1, pullback, high 2, very traditional. You could say 36 is the better high two because it comes at a worse price. Low ones and high ones are generally have more sellers above, so you could take this for a quick scalp. High twos shows that there's a trend line break. So at this point in time, bar 35 doesn't necessarily break the trend line, but if we add context, we might be able to get we buy 35 and capture 36, 37, scale out, buy the first pullback after a 3-bar microchannel. 38 is a great signal for the bulls because it's a bad sell signal. Remember, price action is fractal. You guys starting to see how the lessons are repeating. The chart doesn't necessarily matter. We just talked about this on the 15-minute chart right here. Bad sell signal, 1, 2, 3. That's a lot of bull bars. Bad sell signal, it's better to fade this, and you can buy that for 1-to-1 quicker than the bears. See, bulls made 1-to-1 faster buying 38 than bears. Bears never really even made 1-to-1. So that's a hint that we are not in a bear trend. We are not in a trading range anymore. Because if we were in a trading range, this is trading range highs. It should be a failed breakout, but it wasn't. Kept going. So you gotta come to terms with what the day is eventually if you're a bear. Bulls make 1-to-1 of the 3-bar microchannel. That's great. They barely make it, and I was being generous with that pull. They do make it if you hold all the way over here. That's fine. I don't think it's worth the hold through the pullback. I think you should, if you're trading this, the way I would do it would be see that, buy the breakout, scalp it, get out around here, 3 bars for 3 bars in a row. The chances of a pullback increase. Buy that, get out, 3-4 bars. Maybe you wait. This is now you're acknowledging we're in a third leg, or if you think it's a trading range, if you think it's a small pullback trend, you will buy this and be willing to buy lower. Or you buy this and get out on a bear bar, 51 sold off and rallied. Leg 1, pullback leg 2, wedge bottom, buy 50, 52 actually looks like a good sell signal, so I don't know about buying that. Nonetheless, bulls made 1R before bears made 1R. Leg 1, pullback leg 2, high of a trading range, sells off. Leg 1, pullback leg 2. There's about 6 legs in here. Leg 1, pullback leg 2, pullback leg 3, pullback leg 4. Leg 1, pullback leg 2, pullback leg 3, deep pullback. Leg 4, pullback leg 5, pullback leg 6, and you can keep going. We're looking into that in a second. Back to 38. 38's a bad sell signal. Bulls bought it, and it goes for another leg higher. That's great. You make your money there. 3, 4, 5, 6, 39, 30, 39, 40, 41, 42. Bad bull bars closing on their highs. There's more overlap. Tail on 39, tail on 40. Good close, or bit more body on 41. Still has a tail on 42. So lots of overlapping price action. There's lots of selling going on. Bears might not be making money. I want to see the first candle bears can short and make 1R. Fast bears, no. It looks like 47 is the first candle bears can short. I mean, that's still not 1R. Well, if you short the close, you make 1R. You short the lows, you don't. You can see how, okay, so here bears have to sit through a pullback. If their stop is at the swing high, they'll make 1R 51. Bears are making money, trading range highs. We're in the third leg. Leg 1, pullback leg 2, pullback leg 3. Trading range price action, we go sideways for about 45 to 57. It's about an hour. It's almost 12, but that is 12 bars. Bears make a leg 1, pullback leg 2. So you can short the high of 60. 57 is a breakout point, so you can have a limit order below 57. A sell order, you can have a sell order here. You see this, you know it's a trading range, so breakout points get retested in trading ranges. Gets retested, you go for another scalp. So that would look like this. 1-to-1 is not met. You could just go for 1-to-1 of 57. If I was to take that short, I would go for 1-to-1 of 57. Above 60, excuse me. And that's met very quickly. That's a great scalp. Filled and out. Same bar. Or, I mean, not the same bar. I guess you get filled on 60, out on 61. Bears are making money. They made money here, so you can go again. Leg 1, pullback, leg 2, pullback, leg 3. Leg 1, pullback, leg 2. Leg 1, pullback, leg 2, pullback, leg 3. Wedge bottom. And then we rally. Rally starts with 65. 65 is a good reversal candle. How do I know it's a good reversal candle? Because they made 1R very quickly. And you know, I measured this while I was out eating. They were shallow, but think about the bulls who bought the high of 65. Bulls who bought the high of 65 really only sat through one tick of drawdown on 67, and then they made 1R. So they're going to be back. This is a good reversal. We're in a bull trend. We're in a bull trend in a bull regime, right? The bull regime, we're above the EMA. So 1R is not necessarily meant. It would have been great if bulls bought 65 and made 1R 66, but they only sat through one tick of drawdown on 67, and then it goes to their 1R target. They get out. Maybe you buy the first pullback 67 with a limit order. That's not my trade, but you could do that. It's a breakout point. We're in trading range. Breakout points get retested. Then we rally. This is a weak rally. You have a big, small. Expansion, contraction, expansion, contraction, expansion. So leg 1, pullback leg 2, pullback leg 3, pullback leg 4. 72 is a great looking bull bar late in this bull trend. So this is a channel. We know it's two-sided trading because of this leg. We're channeling. 73, bad for the bulls. Bear bar closing on its low. That meets 1R very quickly. And then we go sideways. So we have a weird wedge bottom. Leg 1, pullback, leg 2, pullback, leg 3. Or you could count it from the high here. Leg 1, pullback, leg 2, pullback, leg 3. But nonetheless, 72 is acting as support. Bears fail to break out on 73, and it rallies, closing at the high of the day above the EMA. So overnight session looking like, oh wow, yeah, bulls are still going, so that's great for them. Let's talk about some fractal price action here. What are we at? 16 minutes. We'll keep it rolling. I don't care. I've been doing this by myself on the weekends, studying fractal price action, and I really like it. I'm gonna turn off the gaps here. The reason I turn off the, you'll see why. Okay, so here's a bull leg. This is on the 15-minute. We can go up and down. It's a bull leg right there. Here's another bull leg starting at the low of 35, coming up higher. Put that right there. Put that right there. And then here's another leg. Tail is on 43. We can't see that tail. We're not going to be able to see it, so I'm going to draw this over, drag it over there. Put that over there. And then we have the final leg right here. Well, the leg starts at 42. Okay. So what do we have here? We have on the 5-minute chart, we have a spike, pullback, and we channel for 3 legs. You could say 3, 4 legs, depending on how you want to see it. I restart leg count with momentum. So this is good momentum. Leg 1, pullback, leg 2, pullback, leg 3. This is good momentum. Leg 1, pullback, leg 2, pullback, leg 3, sideways price action. So let's go to the 1 minute. He ha 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 ha. Look at it. Look at it. Okay. So now we can start to look at the, actually, hold on. Let's go back to the 5-minute. So what we're going to look at are these breaks here. We're going to look at this break. We're going to look at this break, this break, this break, this break, this break. We're going to look at all the fractal legs within these legs. So because see how there's 3 legs, I just counted the legs. Leg 1, pullback, leg 2, pullback, leg 3. Leg 1, pullback, leg 2, pullback, leg 3. Leg 1, pullback, leg 2, pullback, leg 3, pullback, leg 4. Kind of a double bottom. There's a high here. So leg 1, pullback, leg 2, pullback, leg 3, pullback. We go sideways. That's what we're looking at. Okay. So we have that strong spike. Leg 1, opposite bar, pullback, leg 2, pullback, leg 3. Trading range, 141. Good momentum for bulls to break out of this trading range. So bulls are breaking out of this trading range with 41, 42, 141, 142, 143, 144. So here, 4 bars in a row, good enough for a pullback. Deep pullback, testing the low of 145 here. This is 148, and then they rally, so you can take that for a scalp back to the recent highs. Then we go sideways. We've had multiple legs higher. Leg 1, pullback, 2, pullback, leg 3, pullback, leg 4. Leg 4 looks great. It's in a bull trend. It's climactic. Why is it climactic? Because it's coming after 3 legs, and it's the best looking bars. We go sideways for a while. This is the second leg pullback. I was talking about the high one earlier. The high one's here. The high two is here. Let me just make sure you guys remember. High one, high two. Copy's getting cold. So yeah, high one, high two, leg one, pull back leg two, second leg trap in a training range, leg one, pull back leg two, pull back leg three, pull back leg four, testing support, and training ranges break out. Did I say testing support? Yeah, I mean the high of this bull bar is support because limit order traders get trapped here. Bears see this strong bar and they put limit orders here, and then 41, 42 traps them. So resistance turns support. Why does it turn support? Well, when the market comes back, bears are going to buy back their shorts because they're trapped. So, and bulls are going to buy the breakout point. Bears are going to buy back their shorts. So that's how resistance turns support, because bears are forced to buy back shorts. Bulls want to buy breakout points. Bears want to get out for a small profit because they short here, they short here, they short here. They get out at their original entry, so they buy back shorts at the swing point that caused the gap, and then that's strong enough for another rally. Leg one, pull back leg two, pull back leg three, climactic price action. We start to go more sideways. I remember I know most of you have heard me say this a bunch of times. If you shoot a bullet into a box, the momentum is going to bounce around, and if it's within the same hour, typically we will see the momentum get shot out at the same angle. So, with that being said, let's say this is the bullet being shot, and now we have this box here that's slanted up. Its trailing range is two-side price action. We can see that with bar 190 here. We can see that with this leg here. And then this eventually has its own bullish breakout sliding upwards there. Momentum, channel phase. This puts us 1, 2, 3. This is the third leg on the 5 minute. And then we're in the fourth bar. So fourth leg, excuse me. So this is the fourth leg, right? This leg here has the most overlap because it's late in the trend. Back to the 1 minute. And yeah, that causes sideways price action. So we're in the fourth leg on 5 minute. We're channeling higher. They pull back leg one, pull back leg two, pull back leg three, pull back leg four. Look at these two bars right here. Leg one, pull back leg two, second leg trap. These bars right here look great after a trend. We can even measure them. I think these bars are bigger. Obviously, they look bigger down here, but just to get some distance, just to gauge. Okay. So 175 is bigger, about the same. Okay, well, these two bars equal the one size of the breakout bar. I can't even remember which bar I measured. This bar is a pretty nice looking bar too, but it's coming off support. These bars are nice looking bars too, but they're coming into resistance late in the bull trend. I got the hiccups all of a sudden. Bulls that buy here, just like here, become support, right? Bears get trapped here, they buy back shorts. Bulls that buy here get trapped, it sells off, they buy more here. Bulls sell out of longs here at the original swing. They can't make it to the original swing, so they barely make money. But let's say the bulls that bought this close get trapped here, they buy more here, they get out here. That's how resistance is made, because bears are going to short the previous swing. They actually had a chance to get out here. And bulls are going to sell out of their longs because they're trapped. So same dynamic, just on the opposite side. How I talked about trap bears here, now we have trap bulls. Those trap bulls cause enough selling pressure for the market to go sideways. There's still more bullish pressure because we don't actually get a full-blown bear trend, but we do go sideways for about an hour, causing these legs lower. And I mentioned how there's six or seven bars here. Although it's two legs, we can see the 6 bars here. You can see another 6 here. So let's see. Strong selling, strong to get its own second leg. That's 1, 2, 3, 4, 5 bear bars in a row. First pullback 28. It's a bad signal. This actually looks like a good bar to buy, but the context for this one is bad. Leg 1, pullback. Leg 2, leg 1, pullback. Leg 2, pullback. Leg 3, pullback. Leg 4. Deep pullback, testing the breakout point. Leg 1, pullback. Leg 2. And then we have a leg 1, pullback. Leg 2, pullback. Leg 3, pullback. Leg 4. Pullback. Leg 5, pullback. Leg 6-ish. Pullback. Leg 7. Leg 7 doesn't necessarily make a new low. We do with 321, and then we rally for the rest of the day. Went over a little bit. Actually, we're not even done. We have to do a bunch of moves real quick. I'm keeping that chart up because I want to do. I'm gonna make slides of that and post them later in Discord, maybe this weekend or later today. First 3 bars in a row here. So if I was looking for microchannel measured moves, it would look like something like this or like that. 1-to-one's met there. Then we get another 3 bars in a row here. Put out the pullback, put out the high 1. I don't know what I would do if I was long here. I'd probably start to get out, or at least I think I would get out. I've been more quicker to take profits lately. I'm trying to get to a scalper's mindset. 3 bars here. This is a hard short. I might pass it up. Don't know. Couldn't tell you because I didn't trade, but it would stick to the system. 3 bars pullback. 1 hour fails. You got to start getting out when you get bull bars closing on their high. I stopped trading around bar 72, but there's multiple bars here. Actually, we'll do it like this because that's the first pullback. You buy the high 1, you make your 1-to-1 pretty quickly. Well, not really, because 1-to-1's here, so you'd have to sit through a deep pullback. Nonetheless, there's that. And then you guys, here's the gaps. I turned off the gaps. Here are the gaps. This shows bears getting trapped. So bears have limit orders at range highs. Shoots across the limit order 21. Excuse me, shoots across the limit. The bears limit orders are all set right here. Boom, breakout, trapping bears. They get a quick chance to get out on 21's tail if they short higher, or they can wait and short here again. Same situation, bears are trying to get short again on the high of 26. We talked about this on the 1-minute chart. That's this gap, or excuse me, this gap is this price action here where the bears got short, having limit orders at this high. Trapped, they get out, they have to buy back shorts, and that rallies again. Are you guys noticing gaps are happening at swing points or breakout points? That's because that's where limit order traders are trapped. Breakouts happen, excuse me. Good breakouts happen when limit order traders get trapped. Reversals happen when market order traders get trapped. That's why it's the same energy. Not necessarily market orders, it could be stop orders too. It could be limit order traders buying lows. That was wrong for me to say reversals happen XYZ. Look, breakouts happen when one side gets trapped and they're forced to do something. So limit order bears are trapped here. They're forced to buy back shorts. Limit order bears trap. Bears buy here. Bulls buy the high here. They buy more. They get out. That creates selling pressure. Bulls want to buy this low. They want to buy 55 low because it rallied. But then 58 breaks out, trapping them, right? They're never really in profits. They buy more and they quickly get out for a pop. And it sells off again, creating a leg 2. This creates a wedge bottom, leg 1. Actually, let's stick to the wedge bottom. Leg 1, pull back, leg 2, pull back, leg 3. And even all within this price action. Leg 1, pull back, leg 2, pull back, leg 1, pull back, leg 2. So there's about 4 bear legs that create the wedge bottom. And then we have the major structure right here that's complete. This is testing the breakout point and it rallies. Bing, bang, boom. Guys, if you learned something, share the show. I would appreciate it. I'll talk to you guys in Discord. Let me know what you guys think of we're going into 1-minute charts a lot, and I plan on keep going because it's gonna enhance our reading on the 5-minute. I don't look at the 1 minute when I'm trading live. I only do it literally here or if I'm studying on the weekends. Hope you guys had a good one. I will talk to you tomorrow. I will be trading. I'm looking forward to it. It's been a kind of a 4-day weekend for me, so I'm definitely ready to get back in the markets. Talk to you guys later. Have a good one. If you learned something, share the show. Don't be a hoe. Join the Discord below. My name is Ding Dong in Discord. Tag me. Ask me some questions. I'll talk to you later. Bye.